I like to think of First Mining Gold like a giant gold vault with, 10, 11 million ounces of gold,
13.
Right. 13. Right. I set you up for that one. 13, a gold vault with not 11 or 12, but 13 million ounces of gold in the ground. Today, I'm joined by Dan Wilton, CEO of First Mining Gold, and we're joining you from Rouyn-Noranda in Quebec, where we just wrapped up a visit of the Duparquet Gold Project. Dan, welcome to Ron's basement.
Well, welcome to Ron. Welcome Ron out of the basement, which I think is, we're delighted to have you come to the project after being such a supporter for so long.
Yeah, it was great to visit the project. For those of you who aren't familiar with it, it's one of two 5 million gold deposit projects that First Mining has in Canada. This one's in Quebec, the other one being Springpole in Ontario.
Yeah.
But today we're going to talk about the Duparquet project because there's been a lot of interesting developments there over the last year in particular.
Yep.
And I think the next year could bring even more good news. So why don't you share with everybody, Dan, kind of what's gone on at the Duparquet project?
The big news for us was completing the PEA, the economic assessment, which we put out about a month ago. And I think the important part for that for us was just demonstrating that this is a project of the size and scale, average annual production of 235,000 ounces a year, all in sustaining cost under $1,000, and a project of that size and scale that you can build for a little bit more than 500 million US. I think it really puts this project in a very, very select class of strategic projects in the gold sector. Mm-hmm. Not to mention that it sits geographically, literally in the center of the Abitibi Gold Belt, which you've had a chance to drive around the Abitibi a little bit today. There's just a little bit of mining around here, right? We're sitting 2 blocks from a smelter right now. So,
There's plenty of gold mining activity in this area.
Yeah, there's no shortage of it.
No doubt about it. And it's a big project that has good economics. Where would it compare to other projects that are being built or that are currently in production in Canada?
So I think if you look at the overall size, it would be, right now the 6th or 7th if you include the projects that are being built. If you take the ones that are in construction right now out of that, it would be probably the 3rd or 4th largest undeveloped gold mine in Canada. And advanced stage, right? That's one of the things that, our followers have known for a long time. And we really keyed in on this when we acquired the project. But 270,000 meters of drilling in this project from 2008 to 2014, taken to pre-feasibility study, extensive metallurgical study. And now you add on to that the fact we've been able to take our team over the last year, really focus on a couple of very important things. One, rescoping the project a little bit to keep it simple, which was the goal of this PEA. So, we're basically just producing a concentrate that ultimately will sell to a smelter, whether that's a smelter in China or it's the smelter, right behind us here, 50 kilometers away. But it's a very simple flow sheet. It makes for a very simple project, but robust and largely robust because it's one of the highest grade open pits in Canada. So it makes that kind of really helps the economics play out.
So I have one question for you. Mm-hmm. 270,000 meters of drilling on this project.
Yes.
What would that cost to start over and do that again today? Just out of curiosity.
Well, listen, when we think about all of the work that was done, the baseline environmental work, the metallurgical work, the feasibility work, the pre-feasibility study, all of that drilling, all told, I think if you tried to do it today, it would cost you probably $100 million.
Wow. Which is comparable to the entire company's market cap.
Yeah. Just the 270,000 meters of drilling on our current drilling rates would be, to replace that today would be probably $50 million.
Right. But there's a lot more work that's gone into this project as well.
Not just the drilling. Yeah. It's the technical studies. It's, a lot of the baseline environmental work that was done. It's the metallurgical studies, like all the things that really put it in quite an advanced category.
Right. Yeah. And when we zoom out or zoom in on First Mining Gold, there's also a number of other projects in your portfolio as well. So from a value perspective, it becomes very attractive right now, especially at this current market cap, for investors who are looking for deep value investments that believe in the future of the precious metals, believe in the future of the mining sector. That you have a company with not just this project, but a number of projects that are positioned to be able to provide the solution for the big companies that are going to find their pipelines of new projects and new ounces potentially running dry in the future.
Very much running dry. I think, one of the things that that we certainly found kind of coming through some of the Precious Metal Summit and Denver Gold Forum conferences that we've been at is, the producers are starting to look out to 2026 to 2030. So they know their capital budgets for the next couple of years. They've been working on everything that was in their pipelines. Very few of them have added projects. And now they're looking at, well, what do we do in 26 to 2030 to show some growth? And the reality is exactly the reason that things are so tough for developers like us right now, and why the share prices are so beaten up, that access to capital is, if we're not at the bottom of the market, we've got to be pretty close. Some think we passed it a few weeks ago. I'm sort of that view myself. But that lack of access to capital, all it's going to do is stop companies from doing work, which means that the projects are not going to be advanced and they're not going to fit into those timelines. Whatever timelines people thought they were fitting into, you're going to stretch those out 2 or 3 years. And that's one of the reasons why, we're proud of the fact that we've been able to take the portfolio of assets and really leverage our Pickle Crows and our Hope Brooks and our Gold Lunds into, what we've turned into a total of more than $50 million of non-dilutive cash that we've used to advance our projects in the tough times. And when you advance your projects in the tough times, they're the first ones up when things turn. So, we've been saying since 2019, we want to have these projects ready for when the industry needs them the most, because you could see this 5 years ago playing out. Lo and behold, we're getting there. Right. So, I think it's a phenomenal opportunity. But one point that you hit on, Ron, that is something we talk about all the time. I think the single most important thing that this PEA demonstrates with a project like Duparquet is the leverage to the gold price. Yeah. So, we have a sensitivity table in our investor deck, which you can find on www.firstmininggold.com. And go to the investor presentation tab.
And you don't forget, call Paul Morris.
Call
too.
Paul Morris,
call
exactly.
Paul, yeah.
Paul at firstmininggold.com.
Paul wants you to call him.
He does want you to call. But the one slide where we have the sensitivity analysis, where you look at what the project's worth at $1,800, where we ran the base case, $2,000, $2,200, you can see every $100 increase in the gold price is 250 million Canadian dollars of pre-tax NPV and about 130 of after-tax NPV. So let's take those down to US dollar numbers. We'll call the 130, 100 million. Recall that with Springpole, we have very similar economics, very similar leverage to the gold price. Every $100 on the Springpole NPV is about $150 million of after-tax NPV US, 250 million US of pre-tax NPV. So that leverage, that's what these big projects really give you. They give you leverage to the gold price because of the ounces in the ground and the size and scale of that production. So, I won't do the math on what $2,500 implies on a First Mining share price if we were to trade at 0.5 times our fundamental value. But you can do that math, and that's when you're looking at multiple dollars per share, right?
Yeah, it's unbelievable because we started out talking about where we are right now, the Duparquet project, which alone, 270,000 meters of drilling, all this work, all this money, and you can buy that for less than the replacement cost just with Duparquet alone. Yeah. But wait, there's more. It's like almost buy one, get one free because you have Springpole, which is just as attractive, has just as good of numbers, and there's 4 other projects and project interests that you own as well. And I heard you speak of this, so I'm stealing this from you not too long ago, and I may be touching on it again, but I think it bears repeating. The big companies, the big mining companies, have prided themselves over the last decade with paying off debt, developing fortress balance sheets, but they did that at the expense of exploration. And I'm speaking in
Yeah,
generalities, but I
yeah.
think it's but they in letting their depleting their pipeline, and it really is the case unless you believe that the demand for gold is going to decrease in the future. But everything that we're you may want to talk to the world central
Yeah,
bankers
I'm not
and
on
the
that camp.
Japanese and the people that are buying it on Costco and
Yeah.
everywhere. I'll leave that alone. So unless you think there's going to be a downturn in demand for gold, where are these big companies going to get the gold? I mean,
Well, they've demonstrated if they're going to go and try and find it themselves, absent a phenomenally successful exploration program, I think if you look over history, it's probably going to cost a big company $50 to $100 an ounce
mm-hmm,
to find a big project like this.
mm-hmm,
We are trading today at sub $10 an ounce
mm-hmm.
for ounces that are well established, well studied, not just the discovery cost, but all the geotechnical and geochemical analysis and metallurgical analysis and
Right.
the engineering and thought that goes behind it and the permitting and building of social license, and ultimately with Springpole we're kind of line of sight on the environmental assessment approvals. Like when you get all of those things, that's the real fortress of your value
Yeah.
around the resource, right?
Mm-hmm.
The resource is important, but if that resource can't ever be extracted, then you only ever get to $10 an ounce for something like that. Option value, ounces in the ground. When you have the social license and you have the permits and our environmental assessment and the capability to move those projects forward, that is a real defensible value. And so, that's why we keep on laser focused and making sure that that's really our number one priority on Springpole. Lots of other ways we're going to add value to the project as well, but getting to those milestones, I think, is just absolutely critical for us.
Yeah, and you bring up a great point because I like to think of First Mining Gold like a giant gold vault with 10, 11 million ounces of gold.
13.
Right, 13. Right, I set you up for that one. 13, a gold vault with not 11 or 12, but 13 million ounces of gold in the ground. And that's one way to look at it, right? I mean, a lot of investors have this motto: if I don't hold it, I don't own it. And I say, well, if I'm not going to hold it and I'm not going to own it, I might as well have it in like the best vault in the world, which is buried in the ground. But you bring up a great point. There's a difference between just having it and letting it sit there and what you're doing, which is taking concrete strategic steps to forward this all of these projects through the permitting process to get them to a point where they become even more valuable because they become more tangible or achievable for a partner in the future or a company that might want to buy one just to add to their current production profile.
Yeah, to put it in context, when you think of the gold in the ground in the vault analogy, the difference is to get that gold out, you probably need to spend 7 to 10 years studying it, permitting it, and probably spend somewhere in the range of $50 to $100 million on further drill outs and studies and permitting and engineering work and all those kind of things as kind of your beginning before you can commit capital to build it, right?
Yeah.
But the biggest issue is the biggest time lag in your exercise of that option to turn it into gold in your hands is all of this development stuff that we have been doing and continue to do. And people hate doing it. And if I could have an asset that was already at the end, I'd love to do that. But we're talking about the difference between, $7 to $10 an ounce where these things are now. And when you get them permitted and they're ready for construction, typically, go back over history. And I've been, doing this since the early 90s. On average, those projects sell for $100 to $200 an ounce.
Yeah.
So, and it's not going to cost you $100 an ounce to get it that far. So
No.
that's the real value capture that comes with advancing these projects.
And if we get a higher gold price, and if we get just a little bit improvement in sentiment toward junior mining, because it's not just First Mining Gold, it's the whole sector, which has been suffering from what's probably some of the worst sentiment that I've ever seen. Things could get interesting.
On the sentiment side, I've lived through financing the mining sector in the global financial crisis. I lived through 2015, 2016 as an investor, and I can tell you this is as bad as any of those times.
Yeah.
Late 90s, early 2000s, interest in gold was dead. Gold was yellow dirt. Well,
right.
Sure, that's fine. And by the way, that's a quote from a friend of mine who actually used to run a big gold business, like
Right.
actually selling gold to central banks.
Yeah.
But it was from that sentiment, gold is yellow dirt, gold's $260 an ounce. 10 years later, gold is $1,900 an ounce, right?
Yeah.
So that's your 7X on the fundamental.
Yeah.
And I don't want to think about what the numbers look like when you go 7X on gold with the leverage that we have with Springpole and Duparquet. I mean, that's, you get really into silly season. So
right.
It's
we'll take it 1x at a time.
1x at a time. I'll take it a penny at a time at this point, buddy.
Right. And the other thing I want to bring up for the investors and get your opinion on this, there's a lot of ways to invest in the junior mining sector, including exploration companies.
Yep.
And I think it's important to point out, especially for people that may be new, like you are exploring, but and that this is a big point to bring up. You already have the gold, like we said earlier. There's already been 270,000 meters of drilling at Duparquet. You already have the gold, and the way things are priced now, the value. I mean, it's almost like, and I'm not putting down any pure exploration companies, but you already have it, and it's being advanced through the process. But the price is just unbelievable when you look at I think I saw in one of the pieces of information we received today that it's like the stock is priced at the equivalent of like $6 or $7 per ounce for gold.
Yeah.
That the investment opportunity, not that we're giving investment advice, but that the value proposition is almost unprecedented.
It is a deep, deep value proposition right now for sure. And listen, exploration, people can make a lot of money on exploration, right? And talented explorationists like James Maxwell, who's with us here today, are magical people to know. But you always have to understand there's the discovery, and then there's everything that happens after a discovery before you have a resource. That unless you really understand how that's going to play out, then you're really just playing momentum. And momentum's great, and there's a lot of these companies are set up to have momentum when you have some technical success. But from the discovery hole to the point where you have a permitted project ready to build, the average in the industry this year is, at this time, is about 15 years between discovery and ready to start construction of a mine. 15 years. And, I think there's ways to make money on the Lassonde curve, right? On that discovery, on demonstrating things are big. But, I've always been far more of a value investor than a momentum investor. And that's, maybe my curse, but, I love things that you think are solid, have fundamental value, and you can see the catalysts that are going to get you there. And that's fundamentally what brought me into First Mining Gold 5 years ago, was this amazing portfolio of projects. And, I think we've done a decent job at demonstrating. Think about, for the context from when I started, in that 5 years, let's say when I started, the market cap was about $100 million. And we've already turned 50 million. We generated $50 million worth of proceeds that we're now using to de-risk the projects from partnering those assets and creating royalties on those assets and things like that. So.
And from a potential investors, and I'm an investor and a stockholder perspective, the market probably hasn't recognized that yet.
No.
right? But that doesn't mean that the work hasn't been done and that the value hasn't been added. I mean, the argument could be made that it's much more of a value opportunity now, in my opinion, because I remember when you first came on board, it's much more of a value opportunity now than it was even then.
Yeah,
Right?
we didn't have Duparquet then
No,
either. We had
right.
10% of Duparquet. We now
Yeah.
own it 100%, you
Right.
know, and the main Duparquet ore body with no royalties. Like, this is
Yeah.
unprecedented that we have this kind of opportunity. So I think we're half as cheap again as we were in 2019,
Mm-hmm.
and our projects are 5 years ahead, and we've got a
Yeah.
great team moving it forward.
Yes.
You know, we just gotta keep the faith and keep grinding forward. That's what we do.
And I'll pay Dan a compliment because I've met much of the team over the last few days, and I can, my viewers, one of the things they like about me is my honesty. You've got some very top notch quality people.
Yeah, when you get
just
to
sense that.
yeah,
I mean, these are good people. Not just that they're nice people, but they're smart and there's a almost an intangible quality that you sense, like it's a
there's a real
top-notch.
passion for what they do,
Yes.
right? And
Yeah.
that's the thing that we've been delighted to be able to bring a team together like we have. It's a pretty rare thing to be able to do. So
Yeah.
when you get back to the basement, we'll find some time and you can I'd love to have James Maxwell on and just talk about exploration, and
Yeah.
have Steve on and just talk about the
Right.
the permitting process and the environment side. So yeah, let people go a little bit deeper into those.
Well, thank you, Dan.
Oh.
This has been a great conversation on behalf of everyone who's joining us. You shared a lot of good insights into the company, but also the market in general. And I think it's going to be an exciting, number of quarters, years, and decades ahead for the company. So,
Well,
thank
and thank you for making the trip up and coming out to
Oh.
see the projects. Ron's been such a great supporter of ours over the years, and yeah, it's great to get you out of the basement
Yes.
and onto the property.
As I always tell everyone, I own First Mining stock long before they sponsored my channel, and I continue to buy the stock. I'm not giving financial advice, but
Yeah.
that's what I believe in, the value that I see here. So,
No, fair enough.
all right, Dan,
Awesome.
thank you.
Thanks, Ron.